welcome to the Stock Market Morning Prep video for Wednesday, April the 30th. Not a whole lot going on yesterday. It was actually very quiet. Dow Jones did end up eking out an 86-point gain. NASDAQ up 29, S&P up 8, almost 9 points, and Russell up $3.77. But it was really all about the indexes. The stocks did not move at all. I'll show that to you on the charts. So really, I'm just going to go over the indexes this morning. We have FOMC conclusion today, and of course they'll have an announcement. And I think that's one of the reasons why markets were very quiet yesterday. I mean, a lot of nothing, a whole lot of nothing. Hurry up and wait. But that's okay. That's what, as traders, we need to identify that, and you need to sit back and wait for opportunity. So I want to get into the charts. I do still feel there is risk to the downside. Nothing has changed my view as far as the analysis is concerned. As far as the bonds, we have a nice inverted head and shoulders, left shoulder, head, right shoulder. We have this neckline, this slanted neckline, which we're kind of chopping around right now. Again, today is FOMC announcement after the meeting is concluded. So anything could happen. Stay away. You'll have a couple of hours, I think, of probably upside movement, and then sideways consolidation until the announcement occurs. And then again, you'll have that wild west of up and down. Stay away from that. It's not worth trading it. Wait till volatility comes down, and then let's see which way this market is going to be headed. Then again, we have another risk event, which is, of course, the non-farm payrolls that come out on Friday. So we have to tiptoe around these certain areas, wait for the best setups, and then I would definitely have a light book going into Friday, that's for sure, and especially going into FOMC. I don't think anything's going to happen. I think they're going to do a $10 billion taper as usual. I really suspect that they do not raise rates. It'd be sick if they did, but I don't think anything else is going to come out of it, so it'll probably be null event. And then after that, we can actually go back to trading in maybe the afternoon, and then, of course, all day tomorrow, waiting for that non-farm payroll number to come out on Friday, okay? But we do have the bonds here. Bonds are holding up quite well. We did have a couple of days of movement to the upside, but bonds did okay. And this is what's concerning me, is the bonds and, of course, the Japanese yen. But let's go right into the charts. This is exactly, look at this, three-handle range all day, other than, of course, this little movement back up and down, and then we pretty much call it a day. As you can see here, 87.66 to 87.95. That's ridiculous. Absolutely no movement at all. But again, as traders, we don't want to be pushing it. We want to expect that. We see it, and we don't do any trading until that comes. Okay. But now let's see if we can go in and take a look at our next chart. ES on the hourly chart, and as you can see here, we are up for 2 days. I would love to see a spike back up into this 1850, 1860-ish area. Then I would start legging into a short trade. Obviously, we need the reversal and the trigger, not just because price is up there, but this is going to entice me a little bit more. I like to see. But if you look at what's happening here, guys, we are making these higher highs and higher lows. I'm sorry, I apologize, lower lows and lower highs here. So this is not a bullish chart for any way, stretch or means here, as you can see. 1992, 1869, 66, and then we're back down here again, just really creating another, bear flag here. So I definitely don't call this bullish at all, and especially when you see all the other indices here. Showed you the transports sold off, 2 days of consolidation here, big long-legged doji, another little doji. So as you can see, this is not anything bullish at all. Low volume, just sitting here doing nothing. And then now is really going to be D-Day. So we'll see what happens. It was sitting up on this little area of support. Either we break down or we break back up again. That's really, unfortunately, what we have to wait for and let price tell us which way this market wants to be headed. IWM, absolutely miserable looking chart. As you can see, another one of our leaders really breaking down the 200 days just above it. And as you can see, lower lows and lower highs. Bear flag patterns upon us. 1, 2, 3, 4. We just dumped again. We really didn't go anywhere yesterday. So this, again, increase in heavy volume. As you can see, there's nothing bullish on this chart at all. And then you have the Qs. Now the Qs, Did manage to muster up a 2-day move to the upside, but to me, I think this is still very bearish. When you look at Tesla, you look at Baidu, you look at LinkedIn, Amazon, all of the high flyers have literally gotten decimated the last 30, 40 trading days. And that's something that is not good when the leaders start to unfold and start to, when money comes out of the leaders, sure enough, they will be coming out of a lot of these different sectors. So really just keep an eye on this. I know it's been kind of quiet the last couple of days, but again, we're fighting this back and forth, and we do have intermarket divergence here, and we have the Qs, the Russell doing terribly. We have the ESOK, we have the Dow Jones doing okay, and then you have the main leaders really faltering here, really losing steam. So the market is kind of iffy right now, and that's why when we have everything lined up in a row and all the cylinders are firing on one, that's when you want to get aggressive. Right now is not the time, only because the markets are confused, so to speak. So the indicators are saying we want to go lower, but yet this manipulation, what's happening in this marketplace, where the Fed continues to pump liquidity in the markets, and markets are fairly valued, and you hear everything on CNBC. Oh, we had a good earnings season. They beat. No, they didn't beat. They beat only because analysts brought down estimates dramatically in order for them to beat. So that is not anything good. You have housing which is not like the stock market, right? Housing can't be manipulated. Housing market, housing data that we had was horrible, absolutely horrible. So we have to pay attention to what's going on, not just at that moment, but everything around us, and take that into consideration when we're trading. Remember that, okay? One last thing, I like to look at the euro dollar here. I've been looking at it for a few days. I want to see if this thing starts to break out, because obviously if we get euro strength, we'll have dollar weakness, and that's another thing that we're going to be paying attention to in the coming sessions. All right, guys, I hope it helps. Again, step aside. I think today you're going to have a pretty much up movement going into FOMC, and then anything goes, and that's why I say take a step aside. If you could find one or two good trades, great. If not, let the day go. Step aside for the day. Look for trades going into tomorrow. Tomorrow should be some good activity, as well as even the end of the day. If the volatility could subside a little bit, and then we get into some good price movement, then I think that we can pick up a couple of good quality trades. All right. Have a good day, everybody, and we shall see you tomorrow in the next video.